Picture this. You have a good job. Your paycheck arrives every 2 weeks. Your savings account is growing. You invest in the stock market, and everything seems to be going according to plan. Then one unexpected event changes everything. Your company announces layoffs. Your income disappears overnight. Suddenly, it doesn't matter how good your investments are if your bills are due next week. Most people think diversification is something investors do. In reality, diversification is a life strategy. The biggest financial risk isn't losing money in the market. It's depending on one thing for everything. Today, let's explore why the strongest financial systems are built on multiple layers of protection, not just one. Diversify your income. Your paycheck is probably your largest financial asset. But if it comes from only one source, your entire financial life depends on a single employer. That's concentration risk. Imagine having a full-time job while also earning from freelance work, dividends, rental income, or a small online business. If one source disappears, the others continue working. You don't need 5 income streams tomorrow, but building even one additional source creates resilience. The goal isn't to become rich overnight. It's to make sure one setback doesn't become a financial crisis. Diversify where you keep your money. Many people keep every dollar in a single bank account. It's convenient, but convenience isn't always resilience. A temporary technical outage, a frozen account, fraud, or even a lost debit card can leave you without immediate access to your money. That's why many financially organized people separate their money. They may keep everyday spending money in one account, emergency savings in another bank, and maintain a small amount of cash at home for unexpected situations. The idea isn't to expect disaster. It's to avoid having a single point of failure. Diversify your assets. Cash is important, but cash slowly loses purchasing power because of inflation. Stocks offer long-term growth, but they can be volatile. Real estate can build wealth, but it's expensive and illiquid. Precious metals may hold value during periods of uncertainty, but they don't generate income. Every asset has strengths. Every asset has weaknesses. That's exactly why diversification works. Instead of asking which asset is best, ask, how can different assets protect me in different situations? A balanced financial life rarely depends on one type of asset. Diversify your investments. This is the type of diversification most people know. Putting your entire investment portfolio into one company or even one industry is risky. Even successful businesses can experience unexpected setbacks. Instead, many long-term investors spread their money across hundreds or thousands of companies using broad index funds. Some also diversify internationally, recognizing that no single country leads the global economy forever. The goal isn't to predict tomorrow's winner. It's to participate in long-term economic growth while reducing unnecessary risk. Diversify your skills. One form of diversification is often overlooked: your knowledge. If your career depends on one specialized skill, technological changes or industry shifts can quickly reduce your opportunities. Learning new skills, improving communication, understanding personal finance, or developing digital abilities increases your flexibility. Your skills are investments too. And unlike the stock market, no one can take them away from you. The bigger picture. Think about modern airplanes. They don't rely on a single system. Critical components have backups, not because failure is expected, because preparation makes failure manageable. Your finances should work the same way. Multiple income sources, multiple places to store money, different types of assets, diversified investments, a growing set of valuable skills. Each layer makes the entire system stronger. Final thoughts. Diversification isn't about expecting the worst. It's about preparing for uncertainty. The future is impossible to predict. Jobs change, markets fluctuate, technology evolves. Life surprises everyone. Financial security doesn't come from finding one perfect investment or one perfect career. It comes from building a system where no single event can destroy everything you've worked for.
Because in personal finance, the safest strategy isn't putting all your confidence in one basket. It's making sure you have several.